Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at a leader in the financial tech sector. This company has been dominating the industry for years, and they're trusted by consumers all around the world. Wall Street's projecting a major expansion in their operations over the next 5 years and projects them to be much larger in the future compared to where they are today. And right now, their share price has fallen from its highs, and during this ongoing market transition away from growth and into value, it may be a great time to buy the dip. They have also just released their Q1 2021 earnings, and they reported the best first quarter in the company's history with very strong numbers that crushed analyst projections, and they also raised their guidance for the remainder of the year. And the company we're going to focus on in this episode is PayPal. I'm sure many of you watching have used a PayPal service before or have at least heard of this company. And right now, you can pick up a share for right around $247, and over the trailing 12 months, they are up by 102%. Right now, the company has a market cap at $293 billion, and they trade with a forward PE of 54.8. And even though they've seen such a fast run up, the company is down significantly from their 52-week high of over $300 per share. And we can see from this high point back in February of 2021, the share price is now down by close to 19%. So a major dip in this fintech leader, and now would be a great time to start or add to an existing position. And the company has also just released their Q1 2021 numbers where they crushed analyst projections. And before we take a look at those numbers specifically, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. So please hit that like button, subscribe for the daily videos. And now we're going to continue on with PayPal in this episode, do somewhat of a full analysis on the company, go over their latest quarterly results, their plans for future expansion, and the financial statements of this fast-moving business. So if we take a look at the numbers, they came in with revenue in Q1 of $6.03 billion, beating the expectation set at 5.9. And their EPS came in at $1.22, beating the expectation of $1.01 per share. And their total payment volume beat expectations by $20 billion, coming in at 285. And if we take a look at their earnings release, this was the strongest quarter for Q1 in PayPal's history. Their total active accounts grew 21% year over year. Their total revenue was up 31% over the same quarter back in 2020. And what's impressive is their non-GAAP EPS grew 84% year over year. So they've actually increased profitability over the past 12 months. And one thing I love to see is their quarterly free cash flow grew 27% year over year as well. So during this transition out of tech, where a lot of the companies that have seen massive run-ups who really don't have the revenue, the cash flow, or the earnings to sustain their valuations, I think they're going to get hit extremely hard going forward. But a company like PayPal, who still has great earnings, very profitable, strong free cash flow, will be able to fund their own growth going forward, and the company has the ability to weather any economic downturns. And a key portion of their Q1 success that we have to discuss is their entry into the cryptocurrency market. And the company's CEO has just announced plans for their next-gen digital wallet that will be based on making the crypto experience even easier and more user-friendly. And a good portion of their new active accounts are related to the crypto world. And the company's CEO says they've seen great success in their crypto efforts, and he believes his company can rival the leader in that space, which is the newly IPO'd Coinbase, over the next few years. And right now you can use your PayPal crypto to make purchases at 26 million retailers, making it one of the first companies to allow the everyday consumer the use of Bitcoin in everyday transactions and actually use it to purchase goods and services. So they're entering into the crypto market, which we all know has exploded in popularity as of late, and the company truly believes they can rival Coinbase as a top player in that industry. And during their presentation, they also shared a look of their next-gen wallet. So essentially, it's going to be one easy-to-use platform where you can control all of your finances. Your crypto, your normal PayPal US cash, your different equities, and everything you would need to do all your daily financial goals and your crypto investing in one very simple, easy-to-use digital wallet. And a key reason to why I believe PayPal is going to be very successful in the crypto space is because they are already the number one trusted digital finance company in the market right now. So people are 54% more willing to make a purchase online when the business accepts PayPal. So that trust and that loyalty is already there in consumers' mindsets. They've seen the PayPal brand for years, they can trust it, and now that the fact that you can use PayPal to buy and hold crypto, I think it's going to open up the market in the industry to a lot more conservative individuals not willing to try out a brand new marketplace like Coinbase, who just freshly IPO'd. And one thing I want to mention is that the people who are not in crypto yet are the individuals who are scared to take the risks. Right now, crypto, although it's fully legal, is still new and very speculative. And for a lot of people, they don't trust the online exchanges and how Bitcoin really works. So a company they've already been using for years, like PayPal, comes out with these features where they make it very simple to buy, hold, and use crypto. I think it's going to really open up the market to many more middle-aged adults. I'm going to say 35 and over. So I think PayPal, that trust and that brand recognition and the loyalty is going to allow them to be very successful in the crypto space, which still has the stigma of being risky, somewhat sketchy, and a lot of unknowns. And of course, going forward, the company has major projections for the growth over the medium term, which is the next 5 years going out. And if we take a look at the numbers, they believe their total active accounts will grow at a CAGR of 15%, and achieve 750 million people, which would double their current number. And they believe they're going to 3x their payment volume to over 2.8 trillion, and that's going to grow at 25% per year. So overall, a lot of growth in their active accounts and much more payment volume flowing through the PayPal ecosystem. And in terms of total revenue, by 2025, so over the next 4 to 5 years, they project they're going to more than double. From 21.5 billion of total sales in 2020, they believe they're going to cross more than 50 billion in the next 5 years at year end 2025, which is an annual CAGR of about 20%. So for this company, already worth around 300 billion, the leader in the industry, they have no signs of slowing down anytime soon and are projecting 20% annual expansion to over $50 billion in annual sales over the next 5 years. And with regard to earnings, that's projected to grow at 22% per year as well, and they expect to expand their operating margin by a decent percentage. So over the longer term, PayPal has a lot of future goals that I believe is going to make the company worth a lot more than where they are today. And when investing, a lot of people get too focused on the best time to buy at the lowest point, and they wait too long and they miss the good opportunities. But with a company like PayPal, they're already down 18-19% from their high, and right now at this $300 billion market cap, if you believe that by 2025, when they're doing $50 billion of revenue and earnings continue to grow at 20% annually, if you think the company's going to be worth a lot more than the current valuation of $300 billion, now may be a great opportunity to buy the dip, make the most of this buying power at $247 per share, and hopefully, if everything goes right and they can achieve this, watch the company be worth a lot more 5 years down the road. And now if we take a look at their financial statements to see how fast they've been moving in the past 5 years, we can see back in 2016, they only had around $10.8 billion in annual sales, and now they've close to doubled that over the past 5 years to $21.4 billion in the trailing 12 months, and continuous upward momentum. And if we take a look at their profitability, total net income exploded over the past year to $4.2 billion, reaching a record high for the company. And if we take a look at their balance sheet, they are also in a very healthy financial position with total current assets of $51 billion and short-term debt of only $38 billion. So the company's current ratio does come in above 1 right now, and over the next 12 months, I do not believe PayPal will have any liquidity issues. And now if we take a quick look at their cash flow statement, we can see over the prior year, their total free cash flow saw some nice expansion and reached just under $5 billion in 2020. And going forward, analysts are projecting some nice expansion as well, and they're predicting $25.7 billion in current year revenue, which would be growth of 20%, followed by another 20% growth throughout 2022 to over $31 billion of total top line. and the company's expected earnings are forecasted to grow at 16% annually for the next 3 years. And we can see from where they are today, we're forecasting top and bottom line expansion for many years to come. And by 2025, these analysts are projecting $53.16 billion of total sales with total earnings right below $10 billion. So if they can achieve these metrics, I do believe PayPal will be worth a lot more than where they sit today. And going forward for the next 12 months, we have a 12-month price target at $311, which represents around 24% upside from its current position. And PayPal is considered a buy with 17 strong buys, 26 buys, and 6 holds, and no one is selling out of this company. And over the past 6 quarters, we can see 5 positive surprises, only 1 miss, and total revenue projected to grow annually like we've seen from all the other charts. And with regard to total share price, Wall Street's forecasting 23% annual expansion every single year, which would be absolutely incredible. They have the company as a strong buy, coming in at a 1.8, and the current share price of $247 is well below that 12-month expectation, right around $310. And if we take a look at a second source and jump over to CNN Business, their 12-month forecast sits a little bit higher at around 313, which represents close to 27% upside from their current level. So a lot of analysts on Wall Street do believe PayPal is down right now and it will recover going forward. And I think as a whole, I can absolutely see PayPal be trading at a valuation above 500 or 600 billion over the next 5 years as the company continues to grow revenue at 20% annually and their earnings grow at that estimated 20 to 22% per year. If they can achieve all of these metrics, if crypto wealth continues to expand, PayPal can grow more profitably into that sector, and as a whole, the entire e-commerce ecosystem continues to grow and PayPal remains a leader in that market, I think this company is well positioned to continue to expand for many years to come. So we had to discuss them in an episode today because after their Q1 report, where they shared the best Q1 in the company's history and their share price is still down 18% from its highs, I thought now is a great opportunity to talk about a very strong tech company that I believe will weather any economic downturn going forward. And they have the fundamentals, the profits, and the cash flow to succeed over the longer term. So I want to thank you for watching the video to the end. I am the Gen Z Investor. Please hit that like button and subscribe. Let me know down in the comments what you think about PayPal, if you're going to invest in the brand, if you already own them. And just remember, I am not a financial advisor. Nothing I say here is financial advice. We just took a look at some articles online and discussed the numbers that PayPal just shared. I don't recommend the stock. I never recommend any stocks. Do your own research, figure out what you like and what you want to invest in, and then share your own opinions down in the comments and make your own buying decisions. So thank you for watching to the end, and I will see you in tomorrow's episode.